Well, let's go straight to the action on the Lal Street, where the markets witnessed a sharp recovery in the second half after weak global cues translated to a weak start. So the Nifty finally reclaiming the 10,900 mark. This after a gap down opening. The Sensex recovered more than 300 points from the lows to end with gains of 0.1%. Broader markets outperformed slightly, while the Bank Nifty rallied about 0.5%. That was the story across our markets, finally closing in the positive territory. In the currency space, the rupee ending at its highest level since the 30th of November. The domestic unit ended at 70.44 to the dollar. This against Monday's close of 71.54. This is the rupee's biggest single session gain in over 5 years. So plenty of action there in the currency market. And the rupee rally was a result of a fall in crude oil prices. Crude prices, in fact, tanking for the third straight day. Reports of swelling inventories and the forecast of a record US and Russian output combined with a sharp global market sell-off took a toll on crude prices. 1.5% lower on Brent 58.75, NYMEX 2.5% lower at about 48. But the two big political developments today that could have serious implications for the economy. Congress President Rahul Gandhi has promised a nationwide farm loan waiver if voted to power, and Prime Minister Modi has promised to prune the 28% GST slab just days ahead of the GST Council meeting. Now let's first take a look at the loan waiver promise. A day after the newly elected Congress government in Madhya Pradesh and Chhattisgarh waived off farm loans, Rahul Gandhi has promised a nationwide loan waiver. Speaking outside Parliament, Rahul Gandhi said he will not let the Prime Minister sleep or rest till he waives off loans of farmers. In just the last couple of years, 7 states have announced large-scale farm loan waivers to the tune of over 2 lakh crore rupees. Here's Rahul Gandhi's loan waiver pitch.
मैं आपको यहाँ बताना चाहता हूँ कि कांग्रेस पार्टी और बाकी सब विपक्ष की पार्टी एक होकर नरेंद्र मोदी से कर्जा माफ करके ही दिखाएगी। हम खड़े होंगे, हम उनसे लड़ेंगे, 1 इंच पीछे नहीं हटेंगे, उनको सोने नहीं देंगे, रात भर सोने नहीं देंगे जब तक हिंदुस्तान के किसान का कर्जा माफ नहीं होगा।
2019 का चुनाव सामने, आप तो कह रहे हैं मोदी सरकार करवा लेंगे, लेकिन अगर नहीं हो पाया तो क्या
नहीं,
आपका ये प्रमुख वादा होगा कि आप लोकसभा चुनाव में 10 दिन के अंदर माफ करेंगे?
देखिए, ये तो आप पता नहीं कैसा सवाल पूछ रहे हो। ये तो मतलब गारंटीड 100% है। अगर मोदी जी नहीं कराएंगे तो हम कराएंगे। अब हम नरेंद्र मोदी पे ऐसा दबाव डालेंगे, और सिर्फ कांग्रेस पार्टी नहीं, सिर्फ कांग्रेस पार्टी नहीं, हिंदुस्तान का हर किसान, एक को नहीं छोड़ने वाले हम, आप सबको लेकर हम कर्जा माफ करवाएंगे।
Well, that's Rahul Gandhi there. Meanwhile, after Madhya Pradesh, Chhattisgarh has waived off farm loans worth 6,100 crore rupees. This move will benefit around 17 lakh farmers. This was a promise made by the Congress in its manifesto, and today the new government in Chhattisgarh signing off on it. Now, the Gujarat government, meanwhile, has waived off electricity bills worth 650 crore rupees for 6 lakh rural households. So this is a new waiver that's been announced by the Gujarat government today, waiving 650 crore rupees for 6 lakh rural households. So that's an electricity waiver, not a farm loan waiver that's been announced. But from Rahul Gandhi to Prime Minister Modi, speaking at an event in Mumbai, the Prime Minister has promised a simpler GST regime, and he went on to say that 99% of items will soon be under the 18% tax slab or below that. The Congress party has been clamoring for pruning the 28% tax slab. In fact, just last week, we reported that the Congress finance ministers and non-BJP members of the GST Council will hold a huddle ahead of the weekend meeting of the council. We now have 14 non-BJP members in the council, which has a total strength of 31. We also understand that big-ticket rate cuts are unlikely in the upcoming council meeting if one goes by what officials say. But remember, finally, it will be a political call. Centre and the states are worried about revenue. Sapna Das, who's been tracking those developments, join us now. Sapna, what are you picking up? I mean, the Fitment Committee will present its recommendations, but finally, let's be clear, it will be a political call.
Well, we are clearly given to understand that the central and states are adopting a cautious approach as far as pushing through with the major rate changes or rate cuts in the GST Council is concerned. The upcoming meeting, of course, is on 22nd December, sometime this weekend. Having said that, the caution on both sides, the central as well as the states, probably arises from the fact that there are already revenue concerns, and there will be revenue implications looking at, if you consider the major items which have been talked about recently. For example, cement cement sector, we are given to understand if the rates get reduced from 28% to 18%, this would mean an annual exchequer loss of around 7,000 to 8,000 crores, both the centre and the states put together. So these are big numbers that we are talking about. However, there is also another point, which is the fact that probably the council as of now would like to hold back its firepower, and even if they want to push through with major rate changes, that could be sometime later on in the month of Jan, if that at all has to happen. So this is what the scenario is as of now. If a quick look at the GST Council agenda, the upcoming meeting agenda doesn't point towards any kind of a major rate proposal that is part of the formal, checklist to speak about. However, the normal GST rate rationalization, which has been an ongoing exercise, that cannot be ruled out. However, we are given to understand that may be fiscally neutral. For example, there are many items even now where the input rates are higher than the output rates. Probably some commodities may find some more parity as far as the GST rates are concerned. But that, as I've just indicated again, that may be a fiscally neutral exercise. Probably after the December meeting is over, in the wisdom of the council, they may take a forward look as to what needs to be done in case major rate rejigs need to be pushed at all or not, but that will spill over to the calendar year 2019.
All right, Sapna, appreciate you joining us. Remember, the Fitment Committee, which is the committee that looks at rates, so far, the Fitment Committee's recommendations have not reached GST Council members. Listen in to Manpreet Badal, Punjab's finance minister. He feels that the Prime Minister should not be the one announcing a roadmap on GST rationalisation, because it is a matter that should be decided upon by the GST Council. Kerala's Finance Minister Thomas Isaac feels that the story of GST in India has become one of knee-jerk reactions. Listen in.
What the Prime Minister has announced today, and I would take exception to that, because whether rates need to be cut or some rates need to be increased or whatever, that is not the prerogative of the Prime Minister. That is the prerogative of the GST Council. The agenda has not been circulated. GST Council, because we have pooled in our sovereignty, all states and the centre together. But I have seen in the last 1.5 years since GST has started in India, that I've seen it during the Gujarat elections, and I have seen it in other elections, and now I think the government is in a election mode. So, but I personally feel that the GST Council should not be a forum of populist policies.
The story of GST in India has become a story of knee-jerk reactions to whatever happens just before the meeting of the GST Council. Commodities which are not that essential, which are the consumer durables and so on, were traditional tax system, pre-GST system, they were suffering a rate anything between 35% to 45%. They were all reduced to effective rate of 28%. Now you are reducing to 18%. Now there is something called distribution. The distributive impact of tax. You read the canons of taxation, they will teach you first. You have to look at the distributive impact.
Yes.
Now, what is the distributive impact of the reduction? It's becoming more iniquitous. The richer people are let off, and the poor people, their burdens are not reduced.
So GST Council meeting on the 22nd. Are we likely to see big ticket rate changes? Hints coming in from the Prime Minister today, but remember that the Council will take up these matters. So far, no rate rationalisation, significant rate rationalisation recommendations have been sent in to the GST Council, but we'll be tracking that meeting very, very closely. Now, Union Minister Ramdas Athavale has said that every Indian will get 15 lakh rupees in their bank account slowly. Now, remember, this was a promise made by Prime Minister Modi during the election campaign for 2014 as he vowed to crack down on black money. The Minister of State for Social Justice went on to blame the Reserve Bank of India for the delay in the transfer of money, saying, and I quote, that there are some technical issues. Take a listen.
15 lakh rupees as promised by the centre will come gradually. We had asked the Reserve Bank for money, but to no avail. There are some technical issues.
Well, in a step to boost liquidity in the system, the Reserve Bank has decided to step up the purchase of its government securities under the open market operations. Ritu standing by with more details. Ritu, so what's the OMO plan now?
Well, Shireen, for the month of December, initially RBI had said that it would buy government securities and, under the open market operation route to the tune of 40,000 crore rupees, keeping in mind the liquidity needs of the system. But that, of course, is something that RBI acknowledges was in deficit of what was required and has now stepped it up to 50,000 crore rupees. And therefore, the last two tranches of OMO auctions have been increased from 10,000 crores each to 15,000 crore rupees. In addition, RBI has gone ahead and for the very first time claimed that for the month of January, it would be pumping in liquidity to the tune of 50,000 crore rupees, in excess of what it had promised, at least for the month of December as well. And this is in line with what Viral Acharya had also said, Deputy Governor, in the last RBI press conference, that up till the month of March 2019, RBI will continue to, undertake these OMO operations to infuse further liquidity in the system, which, do remember, is in deficit according to various reports. The current deficit in the system is to the tune of 1 lakh crore rupees. And with the advance tax, money also outflowing in the month of December, that could only increase from here. So keeping that in mind, RBI has increased the OMO purchases. It says that up till March 2019, it'll continue to monitor the current market and liquidity situations and accordingly, evolve the OMO plans. And this remains flexible. But yes, it is an acknowledgement that liquidity was in deficit and therefore RBI has, stepped up the gas, so to speak, with further liquidity infusions into the market.
Okay, Ritu, IDFC Bank is now IDFC First Bank. The merger with Capital First is a done deal and there are some significant management changes. Take us through those as well.
Well, yes, it's been a year since the announcement was first made and finally effective December 18 today, the merger of Capital First and IDFC Bank is going to be effective. A new name has been approved by the RBI. The combined entity will now be called IDFC First Bank Limited and V. Vaidyanathan is going to be the MD and CEO of the combined entity. That, has finally been approved by the Reserve Bank of India. 31st December has been set as the record date for equity share transfer, which means, shareholders, as per the agreement, will get 139 shares of IDFC Bank for every 10 shares that they hold of Capital First. There are a lot of board level changes as well. For instance, Rajiv Lal, who is the MD and CEO of the bank, will now be part-time non-executive chairman of the combined entity. This is still pending RBI approval, of course. There are also some resignations from the board, but in effect, 5 to 7 new appointments have been made. Vrinda Jagedar, Hemang Raja, Vishal Mahadevia, Ashish Kamath, as well as Desh Dogra have been appointed independent directors on the new board for a period of 5 years. Now the combined entity will be serving about 7.2 million customers and will have 203 branches. It is a win-win for both the sides, really, with Capital First finally realizing its dream of being a bank and IDFC Bank, having a larger retail presence, something that the bank was unable to do, initially as it had outlined in its plan when it first got the license.
Okay, so a new beginning there for not just the bank, but also people like V. Vaidyanathan. Ritu, thanks very much for joining us with both of those stories. Now, US President Donald Trump has warned the US Federal Reserve against a rate hike. Trump referred to a Wall Street Journal op-ed published titled "Time for a Fed Pause" to drive home his point. He tweeted, and I quote, "I hope the people over at the Fed will read today's Wall Street Journal editorial before they make yet another mistake. Also, don't let the market become any more illiquid than it already is. Stop with the 50 Bs. Feel the market. Don't just go by meaningless numbers. Good luck." End of quote. Trump's 50 Bs may refer to the Fed's current policy of reducing its bond holding by a maximum of $50 billion per month. Trump's tweet comes hours after the Fed started a 2-day meeting at which it's widely expected to raise interest rates by at least 25 basis points. From America to China, in what comes as a show of defiance to international calls for changes in its economy, Xi Jinping has warned other nations not to dictate China what to do. President Xi was speaking at an event marking the 40th anniversary of opening up of the Chinese economy. He said that China has the right to pursue its own path going forward. That's not all. He also stressed on his commitment to reforms and opening up the economy going forward. Emily Tan brings us more.
China marked the 40th anniversary of reform and opening up, and in his 90-minute address to the nation from the Great Hall of the People, President Xi Jinping said today is an important day, well remembered, as it marks a major turning point in history. And in the commemoration, they are gathered to review and take stock. She said reform and opening up is a great revolution of Chinese people and the nation, propelling a quantum leap in socialism with Chinese characteristics. China has turned from a closed country to one embracing an all-around opening up. It is exactly 40 years to the day that Deng Xiaoping opened a Communist Party conclave that launched China's reform and opening up. This was a highly anticipated speech from President Xi Jinping, but there were no new specific measures announced, only to say that this will be a long process and each step of the reform process will not be easy.
We have introduced more than 1,600 reform initiatives, cracked many hard nuts, and navigated through dangerous currents. Reform is going deeper across the board in a swift but steady manner, with breakthroughs on multiple fronts.
President Xi quoted Mao Zedong saying, "If we don't make reforms now, modernization will be doomed." He also made reference to Deng Xiaoping and former presidents Jiang Zemin and Hu Jintao. President Xi came to power in 2013 and initiated his anti-corruption campaign. He went on to say that the government will resolutely clean up corruption. The speech comes amid mounting pressure for China to accelerate reforms amid a trade war with the U.S. and the impact that's having on the Chinese economy. She said no one is in the position to dictate to Chinese people what should and should not be done, but there was no immediate reference to the United States. The commemoration ceremony also included the awarding of Reform Pioneer medals, those who have made great contribution. Of the many acknowledged included Lee Kuan Yew, the first Prime Minister of Singapore, Klaus Schwab from the World Economic Forum, Chinese basketball superstar Yao Ming, and the executive chairman of Alibaba, Jack Ma, alongside that of Tencent, Pony Ma. I'm Emily Tan in Hong Kong. Back to you.
Well, no one can dictate what China decides to do. Manchester United had sacked their manager Jose Mourinho today. The move comes after United's worst start to the English Premier League in 28 years. After 17 games, Manchester United is languishing at the 6th position in the table with a 0-goal difference. The club also announced that they will appoint a caretaker manager for the remainder of the season. He is the third manager to be sacked by the club in 5 years. And with that, it is time for us to wrap up this edition of What's Hot. Thanks very much for watching. Up next, the Nifty reclaims the 10,900 mark. This after a gap-down opening, the Sensex also recovered over 300 points from its intraday low. Markets today talk back. We'll take the action forward. I'll see you again in 30 on India Business Hour.